Hey guys, Youthful Youths here. Today we're going to be going over the portfolio for the week. So to start off, you can see, let me disable this for a second. The market's obviously not doing very hot in a lot of areas. There are certain areas such as energy that's continuing to do strong during, like the whole Iran thing. So there's that. Looks like banks are actually doing decent, and some other stuff like capital or some financials stuff here. So you can see asset management, capital markets. There's also this guy, which is semiconductors equipment. Some very interesting news. Not that it's in our portfolio, but obviously SMCI, I think it's called SMCI. They just went down like 30% in a single day. And that's due to, I believe, their co-founder was getting caught. That are basically smuggling in GPUs to China that were like NVIDIA's GPUs. So it's really interesting there. And so that caused the stock to absolutely nosedive. See that there. So for any of you that was in that, I feel bad for you. But additionally, I'm curious on how this did last week. Yeah. Anyways, going into the portfolio, we are sitting at around 46,459. S&P went down 2%. Our portfolio is up 1.4 or 0.14%. The main reason there was from Composer, which is up about 7% for the week. So that's super nice. We're starting to recoup those losses. And One Finance was down 2.42%. So actually a little bit more than SPY this week. And Webull up 4.81%. So there is that. Now going into this next week on Composer, things are going to get a little bit interesting. So on Thursday and Friday, well, for most of this week, we've actually been on this purple one, which you can see was SQQQ the whole time. Oh, excuse me, it wasn't BSV, it was SQQQ, not TQQ. But so we were shorting this whole time, and then actually paid off a couple of these days, then went up, and then it went down on Wednesday. I think this was, Wednesday, went down again, and it went down again. So it made a decent amount there. And then, yeah, the biggest one was on Friday. You can see we were actually up about 7%, almost an 8% on this strategy alone. I did put in $1,000 into this strategy. This is a strategy that's based off of TQQQ for the long run, which is like one of the sister strategies to the Holy Grail strategy. Very similar in that you basically hold TQQQ the whole time. This was based off of one that I've been tracking for a while, which I can show you guys in a second here. So we could go over here, and this is based off of this one. Just run this FTLT all markets. You can see it's done very good since its OOS, which was about, I think, 2 years ago at this point. A year and a half. Oh, year and a half ago, excuse me. You can see it's above that 0.8 backtest ratio. Maximum drawdown is very low compared to Holy Grail and FTLT. So that being said, we can take a look here at my difference. So the main thing is this all markets version was basically, it had kind of like what it says, all markets. So it had kind of SPY based, QQQ based, it had IWM and DIA. I chopped out IWM and DIA because honestly, I don't feel those are, that good. Like, yes, there's probably areas for that, but in doing so, I actually have a better, slightly more drawdown. But you can see here that this one was expected to have 80% CAGR with nearly 25 drawdown, where mine is just basically 1% higher, but you get nearly 30%, 40% higher returns per year. So that's pretty good. And you can see how that performed like year to date. It would be up 1.37%, whereas SPY would be down 4.8%. More importantly, Holy Grail in that same time period would be down about 18%, so quite a lot. But talking about Holy Grail, and really where the bulk of our portfolio lies at the moment, is we just transitioned because the RSI was actually below 30 for when the trades went through. And so what happened was we actually are now trading on TECL, right? So TECL, which is basically, um, technology bull. So you can see how that's doing here. Why did I say bull and bear? That's interesting. Oh, I know. I think this is potentially from the but extension I have here. But point is, both strategy actually are in that, so you can go to holdings here. So, and the way this one works is pretty similar to a lot of other stuff. And this is using the new all or any thing, but you can basically see if any of these are true, go into VXX. Sorry, this is something else I wanted to point out. The original strategy uses VIXY, VIXY. Other strategies in the space have used something like UVXY, SVIX, USVXY, or yeah, UVXY. That's what I was looking for. Point is, all of those are actually Schedule K1 ETFs, meaning this year or the next tax season after holding this, you're going to have to file those forms. And so a lot of strategies have a kind of different approach, or not a different approach, but basically there's an ability to get non K1 forms, and that's what this strategy is. So, because I'm doing my taxes still, because Composer, well, it's not Composer's fault, but Alpaca, which is their broker dealer, they sent their stuff pretty late. And also, it's not even their fault. I just received ProShares K1 forms like yesterday or on Friday, and I'm still expecting, I think, 2 forms. Point is, to prevent me next year, I'm going to have to wait 2 years now because at the beginning of the year I had some K1 stuff as well. But the point is, to prevent more work for myself, I can actually go into VXX instead of VIXY because this is a non K1 form ETF, and this is actually almost identical to VIXY, right? So almost identical there. Point is, basically we check if we're in a very high momentum kind of area, and then if we are, then or not high momentum but high volatility area, we go here. Otherwise, we're going to select the most overbought one, which really isn't a good explanation of it. Point is not important. Point is, we're in Teckle for Monday, so let's see how that goes tomorrow. If we take a look here at NQ, we're actually hoping that this goes up tomorrow by quite a lot. Right now, it's down slightly. I don't know how well that's going to transform tomorrow, but we will see. And yeah, interestingly, Bitcoin's starting to go down again. But yeah. On the M1 Finance side of things, let's start there. It looks like they finally fixed their UI. Let's see here. So energy, like I said, is doing very well. The best one here is Chevron. On financial side, the best one here is Morgan Stanley. These other two are continuing to fall, which is really worrying. But Visa is in a very interesting position. It's actually, I think, on its death cross, or just passed it recently. So I expect that to rebound quite soon. I'm not sure though. I don't really follow financial or finance sector kind of stuff that much. So Nvidia down, or AMD up 4%, and these other ones are down. So on the opposite side of things, healthcare is down a lot. Eli Lilly down 8%, which is a lot. Then we go consumer staples. The biggest loser there would be from Pepsi, down 6%. Part of that's probably due to the oil stuff. So because it's kind of like this whole huge net where because all that stuff, the consumer prices are going to increase. So such as gasoline prices, other prices in consumer goods and stuff. So yeah. And then last but not least, the biggest loser here was from Duke Energy. So yeah, that was on the utility side of things. In terms of recent activity, we had a few dividends. We had Google for $1.45. We had NextEra for $3.22. We had Duke for $4.45. Another NextEra one for 62 cents. Also, shouldn't forget about the single cent that we got from security lending interest. And then we also did a lot of buying. And then we also got one from RTX for $3.19. So that's pretty cool. If we go over to the holdings tab, we can see Google, AMD, Exxon. So RTX actually got surpassed by Exxon, which is really interesting, as Chevron and Shell are actually right there as well. Kind of makes sense at the given time period, just because, again, we're in a very oil heavy time period because of the ongoing crisis. So on the opposite side of things, Microsoft actually went down even more. Home Depot went down even more. I want to say Visa did go down more. MasterCard down more. But we're out of our 30 stocks, we have 7 of them now that are in the red. I have faith in most of these, if not all of them. So I'm going to continue doing that. Although I've been looking to potentially sell out of these eventually in exchange for a single position on like a more risky ETF. But I'm like not super risky, something like more tech focused or something. The one that I'm looking at right now is I should actually check if I can even get it on here. Let's see. FMTM. Yeah. So it's this FMTM one. You can see like year to date, it's actually really interesting. It's up 3.25% according to them. The last month is actually not doing too hot, and the last week it's done better, but the last month was pretty rough. But if we look at the last year, this is tricky because it doesn't actually have a year's worth. That's the actual biggest problem here. You can see here though, since its inception, it's up 32%, whereas SPY is up 12%. So there's that. More of a momentum ETF, but that's something that I was looking into anyways, like with SPMO. You can see here how that's done the last year, as well as like something like VTI potentially. VTI though is not. We're gonna get less growth. It's more like safe. QQQM is probably the other one I'd probably go into. So you can see here the last year that's gone up 18%. So, last but not least, F Tech, and this one would be 22%. A lot of choices. Don't know which one I wanted to go into. If I want to go into it, I just probably don't want to keep up with this stuff because eventually I think something like Nvidia is going to really not pay out very well, and so eventually I want to switch out the position. It's really hard though, like determining when to switch out. So like, there's like right now I have so many holdings that are in the red that I think could very potentially bounce back in the next few months. So maybe what I do is like do the opposite and do like, okay, get rid of the highest gainers first, right? Especially some of these like energy companies, um, or like not energy company, like energy companies like Exxon, Shell, and Chevron. Probably take out of those because these are probably the highest they've ever been in my portfolio. If I had to guess, something like Nvidia, you can see actually it's dropped so much. This used to be, way higher, but it's dropped so much. It's actually really interesting. It's only up 18% since we've been holding it. It's not entirely true, but our average position, so to speak, is up 18%. So, but yeah, there's a lot of companies like that. Like really, like I would say this one I would consider getting rid of this one for sure because semiconductors I think right now especially are just really in the. I mean, a few months ago is even more, but you know, and that these like four here, Raytheon is just like obviously doing very well right now as well, but yeah. Anyhow, last but not least, on the Webull side of things, we're actually up for the week. I think barely, I don't know, 5%. It's not barely, but I guess for this one it is. You can see this was down 11%, then 3%, then a 12 up, 3 up, and then 3 up. So I expect this to at least start the week out with an additional like amount. Like I think we're gonna go up more because you can see how Bitcoin's done since Friday closed. Ugh. Excuse me, it closed Friday at 70,500. Right now it's sitting around 68.9. So not that far off, but it's there for sure. You can also see it's actually considered to be in a bear cycle right now. I don't know how this works with Bitcoin though. I don't know how technical indicators really work with Bitcoin. If they work, I don't know. You can see it's crosses over quite a bit actually. So who knows? I don't even know if the Bitcoin people know how it works. But yeah, guys, that is it from me. And yeah, I'm just looking forward to. I'm very interested in seeing how this is going to perform. Part of me wants to probably shift more stuff into this one just because it is lower drawdown. Whereas and we're not taking that big of a hit on the stuff. Like I'm not going to be getting 200% or whatever, but I'm not expecting that anyways. So who knows? A lot of choices to make. But yeah, I'll let you guys know along the way. And as always, I wish you guys well to the future.